It's great to have you here, as always, for Trading Buddies Monday edition. And this Monday just happens to be the first one in September. For many, that will mean a change of season. Now, for everyone, that will mean a change of season. For me, it means we're going into spring, and that means summer's not too far away, which is nice. Not a massive summer fan. I like my cool weather, to be honest. And those of you who, of course, live in Singapore and Hong Kong probably don't matter too much because it's warm all the time. All right, let's get stuck in, shall we, and see what's on offer for this Monday and, more importantly, probably the upcoming week. I tend not to trade too much on a Monday. It's more of a, okay, how's the week looking, shaping up, and how do I think I'm going to find trades? That's what it's pretty much all about on a Monday for me. Righto, let's start with gold, as always. And gold is in a bit of a range today that isn't terribly interesting. And the reason is, there we go. The reason is that we are pretty much pivot bound. And by that, I mean we've got DR1 to the upside, weekly pivot untested naturally because it's Monday, to the downside. Let me expand on that just a little bit for those of you who aren't aware. What we attempt to do here, of course, every day that we trade is catch the move as London opens, the move that is as a breakout out of Asia session range. Asia session range today has a high where the current candle is and a low where the second candle of the day is, pretty much right there. And as I said, the problem with that is, if I just point that out, problem with trying to get the breakout is you've got a resistance level very close to where you're entering. And of course, that is multiplied by these highs here. Yes, it was spiked above on Friday with that whipsaw action that we saw as a result of the non-farm employment change, formerly known as NFP announcement. And since we've come back to the middle of that range of that bar, so it really is a case of, okay, are we going to break out? And if so, where? But the breakout doesn't look too enticing to me. As I said, that bar there, or those series of bars, hi Paul P, represent one announcement, which was the non-farm exchange employment change. As I said, we're back inside that very range. We started inside that range, and we're coming out that side of that range. So if you look at weekly pivot and DR1, they're pretty much the boundaries of that candle. Are we going to go above that candle today or below that candle today, or are we going to respect the high and low of that? I would suspect the latter rather than the former. So for that reason, I would only want to trade to DR1 or weekly pivot. DR1, obviously, if we break long, weekly pivot, obviously, if we break short. So therefore, we look at the reward to risk available on that. There's the range, which is $7. The reward would be $4 going to DR1 or going to weekly pivot. It would just about be 4, not quite. So in my parlance, that is risking 7 to win 4. Am I willing to do that? No. Not worth it for me. And of course, this could break and go to heaven, or obviously the reverse of that. But that's not the probability factor. The probability factor says to me, we're going to hit this level and come back off it. How far? I don't know. Whether it's far enough to take out the stop loss, I don't know. Impossible to tell. But the probability is that we will hit that level and bounce off it, and same going in the opposite direction. So no for me. As I add these filters to this breakout, I think we can stay out of the ones that trap you and just spit you out. That's what I choose to do today. Nothing. As far as gold is concerned, from a tradability point of view, not as a breakout, at a very, very interesting level. There's the weekly chart. If I go a little bit tighter, you can see that we have broken through this trade line, or trend line, really it is, a bit of both actually. And we are above the monthly pivot. We're also above the support level, which is depicted by the daily chart, this one here, and screaming out really on the daily that there was a false break. Had you traded that going into non-farm employment change, and I don't know how this candle formed, but it looks very much to me like you might have been taken into that and out in the very same action. Looks a bit bullish, gold, I'd have to say. Yet my bigger picture is still telling me until this level's taken out, I'll still be looking for shorts. On that basis, I'll be looking for false break of that trade line on a weekly chart. That's 2 or 3 weeks away. On a daily chart, the trade line's probably up here somewhere. Let me just get rid of that and put it on the weekly, not the daily. And we can add a daily to that. So that now becomes break here, consolidate, back underneath, retest. So what did I say? Monday, Tuesday, Wednesday, Thursday. By Friday, that might set up, if that is indeed to be the case. On the other hand, as I said, this false break, which was rudely interrupted by the non-farm employment change number, may well play out. There's probably a little bit more than a hint of 3 high test bars on a resistance trade line. Can I say in an uptrend? Don't think I can I? It's the downtrend. Lower lows, lower high, lower low, lower high. Sorry, lower low, lower high, lower low, lower high. So to me, this is still in a downtrend, although the trend line has been breached. So this is the point of interest now. Do we get that break and retest, which is so much a part of the way I trade, and go on with the job? In other words, go with the momentum, which is to the upside, although the trend is still to the downside, maybe broken. Or do we wait for that false break as I've just described? Either way, I can't jump into the market right now on gold. I have to wait and see what that decision is. If, of course, it just goes with recent momentum, which, of course, is very, very clearly bullish, then away it goes. I can't do much about that unless I'm willing to trade that 3 high test bar breakout trade, which is not the worst, I've got to say, but it is against my bias. If I were to trade that, it's above DR1 heading to DR2. It's not a high probability factor for me. So it's a no. I concede it could absolutely happen, but it's a no from me. There's lots of no's on the weekly game changer bars this week. Let me start with them, and I'll give you the 2 trades that I took this morning. The first of the weekly game changer bars is Aussie versus the Kiwi. Now, what I'm looking for with weekly game changer bars is not just the bar itself, which potentially indicates a directional bias for me for the week, but if it agrees with the major theme, I call it the big boss. The major theme for me comes from the primary chart, which is the monthly chart, and it is what really is governing this chart. Now, I can't see up here, but I'm pretty sure I know what's up here. There's a big double top. I think there's a head and shoulders or something to that, of that nature as well, which really, to my mind, is still the big boss because price is underneath everything that's up there. You could argue that the big double bottom sitting here has just turned the market. Maybe it has. If that's the case, then the double bottom followed by a higher low, a higher high, a higher low, a very distinct higher high. Maybe this is the next higher low. Maybe. Am I on board with that? Is the question. I think it's too early to tell, to be honest. And this worries me. This straight up and down price action does concern me a bit. When price came back to the breakout area, in my world, if it was seriously going to rally and therefore convert that as a higher low, it should have done so. Hasn't done that. It's gone straight into consolidation, as I say, which concerns me if I am thinking that this has reversed. So therefore, I still think the big boss lives up here somewhere. And for that reason, I'm in agreement with the game changer bar, because the game changer bar is suggesting to me that we sell underneath it. What deters me somewhat is the position that this occurs, and it really is in the absolute middle of this pennant formation. And I don't really know if we're going here next or here next. The biggest hint I've got is if it does follow that structure, like high to low, low to high, high to low, then we're probably on our way down here. Am I willing to test that is the question. Aussie versus the Kiwi. It's a perhaps. It's not the worst because of what I've just been through. I don't think it's the worst by any stretch of the imagination. Where's the risk, however? There is the stop loss belong here? Does it belong above the structure? That's a good question as well. We'll move on, and maybe if we've got a setup that, or if we don't have a setup that is better than Aussie Kiwi, then I would suggest Aussie Kiwi is potentially worth thinking about for the short. Next one is Euro versus the CAD. I don't think I need to explain too much here, given the last four candles. Indecisive, indecisive, indecisive. That's really a decisive bar because it is a strong reversal bar, without question. The thing here is what we've just discussed on Aussie Kiwi is relevant, but I don't think it is as relevant in that we aren't in the middle of this structure. We're at the top of the structure, therefore at resistance. And therefore, I think this is reasonable. Also, the one thing that will keep me out of that is a rule that I have that says if I have a low test bar followed by a high test bar, I can't trade it. And that's pretty frustrating at times, but it is a rule, and it's a rule I follow because I've been burnt too many times. But if you don't have that rule in your book, then there are far worse positions to take than this one. Again, I would suggest it's certainly not the worst from a directional bias point of view on this weekly chart. How's the big boss? What's he think about that? Well, you tell me. Where is the big boss? This is rangy, absolutely rangy. You could argue that that double bottom is in ruling things. You could argue that that triple top is ruling things. You could argue that we've just had a V-shaped recovery and we've now really created an inverted head and shoulders, in which case, and I'm prepared to believe that that is the case because that's exactly how it looks to me. So I would be thinking long here, not short on the monthly chart. But that doesn't dismiss what I'm seeing on the weekly chart. The weekly chart is clearly at a resistance level. It's not just the trend line. It's got a bit of history through here. You can see the support. I can't see underneath here. So I really don't know what's there, but it's been resistance, been support. It's been support here once again, support here once again. Resistance, then support. And we've come off resistance here, false break of resistance here, and resistance here, and resistance here once again. So that part's pretty clear to me, but so is the bigger picture pretty clear to me that we're potentially in a breakout area. I think I'm quite happy that my rule will keep me out of this. Otherwise, I would be looking to take this short to trade it down to here and maybe then pick up a long from that point. If that's in your textbook or in your rule book, then perhaps that's not the worst. Okay, that is Euro versus the CAD. Euro versus the Swissy is next, and a little bit out of context for me. When I think game changer bars, which is what I call them, right? They're actually in the textbook a key reversal bar. Key because it's at a key level, reversal because it's suggesting that the market's going to reverse. Is the market reversing here? Isn't it going in the same direction? If we were to take heed of the weekly game changer bar, which is saying go short, it's not changing the game at all, is it? We haven't had a rally. All we've done is sell off, bit of a pause there, sell off. So I'm not suggesting for one moment that this can't happen. Of course it can. But it's not what I choose to trade, which is a game changer bar like this one, where price rallied, we got the reversal bar, and then we got the sell-off. That's what I'm looking for. Not looking for sell, 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 and sell again. It doesn't make any sense to me to play it that way. So that would definitely be a no for me. And, of course, we've got all of those indecisive bars there, low test, high test, all over the shop. It's a no, most definitely a no. I've just got a message from Ash, guys. I've just got to check that because I think he's struggling to get into the room. No, it's not from Ash at all. Please ignore. Ah, there he is. He's in the room now. Hey, buddy. I can't hear you, mate. Unmute.
Sorry, mate, that was my fault. Yeah, I've been in and out of the room a little while, but the internet is really playing up. I don't know why it got so sticky, but I've just turned it off and I've turned it back on again. So done the old tech
tech reboot.
Yeah, the tech reboot. Yeah.
Seems to work sometimes. Yeah.
Oh yeah. I mean, it's better than it was a minute ago. So yeah, it seems to work right now.
Have you got anything urgent?
I've got the what? Sorry.
Have you got anything urgent?
Yeah, let me just quickly share screen because
yep. Okay.
I am looking
I'm just going through my weekly stuff. So I do have 2 orders, but they're a long way from entry. So
okay, mate. Well, I've got this CAD Swiss. You know, we talk about this CAD Swiss on a weekly basis. It seems. Got this CAD Swiss actually in the market. Hi, Paul P. I wish we could.
Where's your entry? I've got an order on it too.
You got to order. I've already entered once. I'm just sort of trying to get another entry down here, but okay. I've entered at 0.658, 0.6508.
I think you know where I'll be entering.
I'm going to have a look. Right, let me see. You're going to be entering. You're going to be entering this bar.
Go to the daily.
Okay.
Same thing.
Same thing. Okay, yeah, you're entering that bar. Yeah, so I'm entering the pullback. You're looking for the breakout. So monthly pivots out there. Let me just change this chart. Actually, this is the chart I was looking for IFP. So let me just bring this up here. Okay, yeah. So I've got a couple of things kind of going on right now, and obviously this is the bar. You know, when we kind of look at it, this is the bar that I'm really trading. And I'm just, as I say, I'm just looking for that pullback and looking to see if Monday's bar, Friday's bar, actually gives us an area where it should ultimately hold. But you can see that there's this trend line coming in down here, and we're currently under that trend line, so that's a little bit of a concern. But you know, we got the rest of the day, so we'll see what gives. But you know, does this one continue its kind of pattern? I mean, you look at that actually looks pretty good for some downside, doesn't it? Breaks the downside.
It does. Hold. That's a false break classic.
Yeah, looks like a false break classic, but it's. I mean, it might be that the trend line's there. It's a difficult one, isn't it? I mean, it's it could be that there's a few different areas that it could be. I'm looking at this as well. And we could probably tighten that. Yeah, that looks pretty good as well. I prefer that one actually. So I'm looking at this as a kind of a break of an area, and it does look like it's come back and tested. And let's see if it can continue to the upside. But we've both been waiting on this one for quite some time, and even every time it rallies, it gets reversed and gets swallowed up again. So I've got no huge expectations. So I've just put on a little bit of a nibble here, really, just to see if it can eventually start to move in the right direction. GDP just came out from Switzerland, which was at 0 for the previous quarter, and we haven't had recession, but 0 at the previous quarter, so no growth. If we get another quarter of negative growth, then there's the question of, is that a technical recession? They don't really tell you that, do they? Technical recession is two quarters of negative growth. Well, what's 0? I mean, what if there's no growth?
Yeah, good question.
So yeah, it's right on the line for that one. Canada hasn't had particularly great numbers either. We've seen the United States also actually just start to possibly have a weaker labour market. Really odd Friday.
Yeah, I saw that. The reaction was quite, well, overstated as far as I can see.
It was a strange one, mate. It was a strange one. NFPs came out stronger, so adding jobs, and yet the unemployment figures ticked up.
And wages were down as well.
And I believe wages were down. So where the question really for anybody is, where does that put the Fed? And you'd have to suggest that probably does put the Fed on another pause. Now that will affect just about everything. So if we're looking at the one I do actually really like is gold. Gold's had a decent run really from the downside. So it's I don't like it when it's already had kind of, well, let's have a look on the daily. It's had a couple of waves, isn't it, already? You look on the 4 hourly, it's really already had as well. I suppose you could argue a couple of waves as well. So, but I don't like that really. I'd prefer to get in down here, of course, everybody would, but that's really kind of the way that's what I look for. So I don't like it when it's kind of already running. I get a little less comfortable, and it means I've got to switch up time frames. And if you do switch up time frames, the weekly still doesn't. It's not all that attractive. We've had a decent bounce from this level, and I think we talked about that level, and kicking myself a little bit that I didn't have a little nibble at that, because it was a decent price point when you look through this trend line here. Decent price point to try and get in. The spooky bit was this bar, and that was my problem. Look at this bar with that trend line though. That's really quite clean, isn't it? But it was a horrible looking bar. To actually sort of generate the upside, and that's kept me out of the trade, and I might have to just accept that this one is either gone, or I need another dip and then another turnaround for me to get interested in that. So same philosophy with the CAD Swiss, a break to the upside. I'm trying to get in on the potential turn, and then see how far it can run up. So we'll see what gives with that one. I'm hoping I might get triggered into this one as well. So if I get triggered into 2 positions, I think I'm probably in that actually. I'm probably no, it's 501. I've probably got another couple of pips, and I might get triggered into the second position. So let's see what gives with that one. The FTSE I'm also interested in taking a couple of positions. So I've got some orders sitting right on the level here. This looks again like it is like it's broken out of this particular point. False break to the downside, a push to the upside. That was the area to get into, and because that's the area to get into, I think that's a pretty good area for a stop loss as well. So if it now comes back for me, I've got a couple of orders sat here to see if I can actually grab this one to the upside. I'm not that confident about the global picture, and this is what makes the FTSE difficult, because I think the FTSE is going to be a lot more reactive to the business cycle than most of the other indexes, because of the makeup of the companies within it. But I do think we have one more push potentially to this point here, and that's really going to be the overall target, trying to get up to that point. So around about mid-September, we do see indexes and stocks just weaken off a little bit, but I think maybe a push into that particular price, that particular time period, is worth going after. So I'm going to go after it on that one. The Nasdaq is the other one that I'm looking at, and I've got no orders on the Nasdaq, but I still think that there's maybe some further upside as well to the Nasdaq, and that would put us up to here, which would, you look at this on the daily, it's going to start looking like a triple top. And at that point, I think we might start to see some weakness. And if that coincides with that mid-September kind of time period, I think that the Nasdaq may well have some weakness going in. But it's a tough one, you know. Selling the Nasdaq's it's proved difficult on just about every single occasion you can mention, apart from the obvious ones like COVID. And the occasional sort of point with Donald Trump. But even those, you know, I remember sort of trading the Nasdaq and you know, some of the indexes during Donald Trump stuff, and he would tank the market, but then it would bounce back within moments. And the Nasdaq's got a bit of a propensity to do that. So it's a difficult one to short. How's he doing?
No, as I said, so has he. He's got a propensity to do it too.
Yes,
down one
he does.
minute and bounces back the next. Unbelievable.
Yes, he does. Yeah, unkillable, that guy.
I don't know. Surely they've got him this time. Surely they've got him.
Yeah. Yeah, so that's where we're at anyway, mate. It's few orders in the market. Only one triggered at the minute, which is the CAD Swiss long. I think I'm going to get one more position on that, but that's really one trade, if you like. But that one I wanted to bring to everybody's attention because it's in between both prices. So this is my trade, and we'll see what goes with that one, mate. But it's got a long way to travel. If this is going to pick up, it's got a long way to travel. This is the obvious first point of call, which is probably going to be the point I'll take profit, because then if it breaks through, we might get a chance to re-enter, and then we can have a look at it after that. But ultimately, definitely could come up to this point. You know, over the long term, particularly with the situation with what's going on in Switzerland now. You know, now we're seeing that reduction of GDP. But of course, the tricky thing for the CAD is that it's so heavily correlated to oil, and oil's heavily correlated to the business cycle, heavily correlated to growth. So no growth, no real price surge in oil. Possibly, maybe the same for the CAD. Now,
it does look very strong at the moment, oil.
Yeah, it does, and I suppose this is the thing. On the other side of it, they can always, and they always seem to be able to control the flow of supply, and that changes the narrative and changes the picture again. So right now, I'm basically going on the fact that the chart finally has broken out of this level. After a long period, and I think you could argue it's the first time. You know, coming down here, then it did provide that that high and rejection. That's maybe, you could say, maybe one breakout, but we've had that, and then this, and then really it's been all downside. So this really is the first breakout that we've seen in around about 2 and a bit months, or a month and a half, I should say, really around about a month and a half. Is it the signal? I don't know, but I think it's worth going after, considering the low base down here. You know, we're seeing sort of,
as you say, it's got a heck of a way to travel if we can get it.
Yeah, exactly. Yeah. This is a weekly chart, so you know, you manage to get in somewhere down here, then you've got a. This is and you know, we'll go back to the dailies, but this is the ultimate kind of ultimate target initially. You know, to see if we can get to the top end of that particular pattern, and you look at this on the dailies, that's clearing that initial point and then going even further. So so I like this. If it can get moving. Whether I'd stay in here, I don't know, because it's been so weak, really, this particular currency pair. There may well be enough resistance here to push us all the way back down again, and I think there probably will be, but it's very rare that you get a move down the elevator so drastically without at least testing some area of previous support, which would be this one, and of course this one up here. So so I think there's a huge gap in orders here, because you think lots of people are caught in this trade. You know, lots of buyers are caught in this trade, still caught in this trade. So they're going to want to push the price up to at least see if they can equalize their positions a little bit. Which is why I think that there is a bit of a grab for a potential turnaround here. But we'll see, mate. You know, I've got very little hope in a way about this one working out. But it's very difficult from a trader's perspective to see a chart which is looks undervalued, looks oversold. Then you see a buying signal to not get in.
100%.
And you know, so I've taken it on. You know.
Yeah, look, I go so far as to say you're really not entitled to miss an opportunity like that,
No.
even if it's wrong.
Even if it's wrong, yeah, even if it's wrong. But you can see like the position I've taken is very small. You know, I'm not risking.
I'm exactly the same. Obviously, our different methods of entering the market are evident, but I feel exactly the same, and I feel there's a lot of opportunities. And I said it last week with the pound. I thought the pound was extra special time now to look at it, to sell it.
Yeah.
Because it's been on a rampage. And once they get to those extreme levels, you know, there's only one real thing that you can do as a trader, and that's wait until it shows its potential to turn.
Yeah, I agree. You're obviously not looking at it against the dollar, probably against the Aussie, I'm presuming.
Well, I think I said at the time that I thought pound versus the dollar last week, or was it the week before? I can't remember. Was a good opportunity to sell it.
Yeah, last week it was. I'm not so sure now. I mean, it's, you know, now we've come down here.
Yeah, look, I agree with that because of the reaction, and especially today and probably tomorrow, because of the reaction to NFP, which to my mind is scratch my head time. I think that has to reverse. We have to erase that reaction, and I think that will happen.
Yeah.
Whether it happens today, tomorrow, or over the course of the week, I don't know. But
yeah, it's an interesting one, isn't it? Because actually, you know, look at the indexes during that NFP scenario. They really, it was kind of up and down, and it held on. It wasn't really sure what to make of it. And actually, it wasn't just NFP, I suppose, is the point. It was also the unemployment data. So it was a head scratcher, and the Nasdaq's a fascinating one in many respects technically, because if you look at the Nasdaq on a daily chart, the Nasdaq is also showing signs and signals of reversal. You know, we got this pretty clear looking head and shoulders pattern here, and we're right on the top of the right shoulder. So there is going to be some interest up here. We also have a horizontal level kind of going through here, which we've just poked ourselves through. I'm gonna have to delete these pictures as I come in here. But now,
right, what's that asset?
What's that? Sorry.
What's that asset? Dolly Yen, isn't it?
No, this is the Nasdaq.
Oh, the Nasdaq, right? Okay.
Yeah, this is the Nasdaq, and the Nasdaq's kind of got a bit of a battle here because we've poked through this trend line. I'm going to blow the chart up a bit. We've poked through this trend line just. In fact, we're above it now, but we've got the head and shoulders pattern going on. You know, whether it plays out is a little bit questionable. I'll put it in again just so we can see what it is. There's the head and shoulders pattern. There we got the neckline along here, which it might be. You know, it might not be exactly straight. It might be sort of something like that. But that looks like, well, this looks pretty good. There's the neckline along there. So it's and the point with it really is that if you measure the left shoulder to the head, the middle of the head, 31 bars. You measure where we are now, we're looking at 29 bars. So this is suggesting within the next week, if this is going to play out as a head and shoulders pattern, this needs to be sold off, you know, by Friday, if you like, or during the week.
At the moment, you got a little tweezer top sitting there at resistance.
Yep.
You could even play a false break if it comes back underneath and retest that level that you got on your chart. Yeah, I like that. That makes
I
sense
like
to
that,
me.
mate. And do you know what? I like your thinking there, actually. And I hadn't considered that, but I think that is the way, isn't it? I think you would probably need to wait for the false break because right now it's above this trend line, which suggests that there's going to be even more interest, and it might get up here, and this is the thing about that. That's the middle of September. Middle of September probably would just about qualify at the end of the week. I know we're in the first week. Well, we're sort of in the first sort of forward/second week, but it would just about qualify by Friday. But I think you're absolutely right. If we see something that comes down first and then pops back up again, then we might just a little bit safer,
Yeah,
to,
I'd like
to
that.
try and get in. Yeah. But you're right. No point here. And actually, I think we're probably more likely at this stage to try to continue to attempt to test these highs. And if we do, really, we're going to need to see a reversal. So we see some sort of high test bar up here, and then give us some sort of tower top, and then that's what that would look like. Tower top, and then a retest of the level, and then we can start coming down and testing this lower end again. I think if the Nasdaq is to show us that, I wouldn't be surprised at all to then see the Nasdaq fall not only to there but through. And maybe come back and test some of the levels that it just hasn't been willing to. I mean, look at that. It's just glare. This is glaring to me. This area here that took off, and similar situation as we were just discussing with the CAD Swiss. No test of an area. There are people basically left on the sidelines here, and waiting to kind of get involved in this move. So this whole area to me is the buy zone, but until it gets down there, then everything's going to be intraday, But that's the kind of buy zone that I see with the Nasdaq.
Cool. No disagreement. So they're your focuses this week so far?
Yeah, they're my focuses, mate. The orders that I've got in the market might well trigger, and if they do, all good. And obviously I've got the CAD Swiss, which has triggered, but they're the two. The only reason really I'm focusing on the CAD Swiss over any other currency pair is that it's embossed in my head because of the last month. And I'd like to say, I was going to say I can't let it go, but actually that'd be ridiculous because that would suggest that I'm going to go after it no matter what. But it's not. It's given us a signal. But it's embossed.
Same.
Yeah.
Look, I'll point out, but you've already seen what I will do, but let's go over it for the folks.
Let's have a look.
This is not CAD. I might as well start here, which is euro dollar, and we spoke about this on Thursday, where I was suggesting that two things can't happen.
I think I've still got a screen, mate.
Really?
Yeah. Okay. Oh, sorry. No, I'm crashing.
It's caught up.
I'm crashing. I'll be back.
right. Reboot. We spoke about this on Thursday, where I said at the time, this is not lining up right. Two things can't happen at the same time. One of them was this, which was euro dollar false break. The other one, of course, which is exactly the same thing, is I've taken it off the screen. Sorry, I put it back. Is dollar index false break, which was absolutely clear. And I said it can't break false and play out this channel at the same time. Can't do it. And of course, NFP said the rest of the story. We're headed to here, or certainly to here, in my humble opinion. This will be another resistance area because this high here and this high here, pretty much the same thing. But what I said earlier, because of Friday's news, this has now made this a whole lot easier, I believe, for me, because I thought today the euro dollar in particular, because of this chart, was an absolute buy on a smaller time frame, not on a daily chart, right? So intraday, it was a buy because, like I said, both these things can't happen. You can't have a false break and fill this box and play out that inverted head and shoulders, if you want to call it that, but certainly the channel that I pointed out on Thursday. So That won't happen now, in my humble opinion. If this is happening, this won't. So we won't get that false break. So I'm going to take that off the chart and focus now on what's in front of me. And what's in front of me was, as I said earlier, that bar there on Friday, which made absolutely no sense to me, given what I saw. NFP number, okay, it was a little bit better, but not so that you'd see that bar. Employment numbers, employment change was bad, wages were bad, and there was one other that we were talking about earlier. So I couldn't see why this would carry on today. And if I look at the chart even closer, I think a test of this weekly pivot and where the daily pivot is now is probably an excellent place to buy the dollar tomorrow or Wednesday at some stage. But today, I thought euro dollar in particular was a great opportunity to get long just for today.
Yeah, I agree with that, mate. It's Labor Day today as well.
Yeah, no US, that's right. Unfortunately, that boat has sailed on the 30-minute chart, which is always the same thing for me. Just like here, you know, when this is giving me nothing underneath the daily pivot's untested, that's exactly what I want to do, is find a way in to trade it. There was one there on Friday, beautiful, right there.
So when you say the boat has sailed because now we've had the daily pivot test, to expect a retracement and another daily pivot test is diminished. Is that the idea?
No, not really, because I'm still expecting the daily bar to be bullish.
Yeah.
What I now have to do is find out or work out in my own mind where that bullishness ends. And I think it's not the daily pivot today. It's probably this area here, the weekly pivot. So I'd be still willing to trade it. The thing that now is an issue is, okay, we've gone the distance to the daily pivot. Do we now want to say, okay, it's going to here, let's jump in? Answer, no. I can't jump in here. But what I can do is wait for a higher low, or better still, this would be the way I'd be looking at euro dollar today right now. Come back to here, give me that support level, any support level that's not this one, then come back above it, retest it. Then I can enter here somewhere and trade to the weekly pivot.
Maybe on that daily chart, if
yes.
if we got the euro dollar kind of closing with this, you know, if the bar looks like this by the end of the day, would you be interested if tomorrow we see the test of that trade line to try and enter above today's bar, today's range, and then go to the daily pivot?
No, because I'd be thinking the opposite.
So that to you, that red bar is not a false break to you?
Not yet, no.
Friday's bar is not a false break. Okay.
This one, no,
yeah.
Not yet.
Okay.
What would have me in two minds is this very clean up until here. Look at a false break, but because it's this trend line or trade line, as I call them, has failed this first false break, right, which would have been enter here.
Yeah,
that's failed, and now it's got a second bite at the cherry. I have to eliminate that because it's invalidated by this one. That's now invalid, so I'm not looking to trade long euro dollar at the moment. I'm only looking to trade it short on the daily chart, not long. So intraday, I want to trade it long to here.
Yeah.
Which would give me a lower high, if you like, and validate these two bars, and validate lower low, lower low, lower high, lower low, lower high, lower low, lower high.
Yeah.
That's what I'd be looking for.
Yeah.
Now the reason I would be bearish tomorrow is exactly the same reason that I said I'd be bullish the dollar index, because the dollar index is in a rampage. Really is. The dollar's red hot. And yes, like I said, the reaction to Friday was over the top, in my humble opinion, and therefore today had to be a correction on that. But where to? And I'm immediately drawn to the weekly pivot and daily pivot, which have now crossed over to the upside, which validates my opinion that we're in a channel and headed back towards the top. So if I could get in here somewhere to trade this long tomorrow, otherwise, or AKA short euro dollar, then I'd be happy to do that. And if I go back to the euro dollar chart, as you say, the break of that trade line and now the retest of that trade line with interest actually gets me interested short, not long, on the daily chart.
Yeah, it's a tricky one, isn't it? I mean, you know, the numbers from Europe are pretty poor. I think Christine Lagarde's out today as well, so she's going to push this market around a little bit. Is she out today, or is it next? Yes, she is. She's out at US Open. So there's the chance that this gets pushed around, and also because we've got the 20th of September is the next Fed announcement. I wonder whether we might be stuck in a range with the dollar index, at least until that particular point.
Yeah, well, the range I've got is pretty broad, to be fair. But
yeah,
when did I start talking about this range? Back here, right? And this shocked me. This surprised me that we actually got that breakout, but it turned out to be false. And look at momentum since. It's unbelievable.
Yes. Yeah.
That's a weekly chart I'm looking at.
Yeah.
Where's the bearishness here? Doesn't exist.
No.
Nobody's selling the dollar here. Nobody.
No.
So
yeah, I mean, if the dollar does weaken, then yeah, I suppose it's a thing, isn't it? If the dollar does weaken, where do you go? Because the euro area, the euro block, isn't particularly healthy. Now, I tell you something. Did you hear about what happened with the UK over the weekend?
No, mate,
From
no.
Well, really interesting. Some of the numbers that were stated prior during the COVID pandemic. So the bounce back after COVID, the COVID pandemic, put us at the lowest growth in the G7. Over the weekend, they've kind of discovered somehow some new data, which suggests that actually we were more like third best growth in the G7. So we grew at a 1.5% higher than they initially predicted. So actually the UK is. And this has been always my big problem with the pound, is that buying the pound has been the obvious kind of call because of interest rates and because of inflation being so hot, but difficult to do because the economy seemed to be so battered and seemed to be in such bad position. This changes the dynamic somewhat. You know,
also,
you know, I mean, it's almost too late in some respects, but it is new information. Now that would suggest to me when we looked at the pound dollar earlier, and the pound's in a similar place to the euro in many respects, at the lower end of its band. We look at that pound dollar. That would suggest to me that that there's a decent chance, particularly after those numbers from the US on Friday, that actually the pound's on for a bit of a rally for a day or so minimum. And possibly
it certainly
more.
wouldn't be counter trend.
Yeah, no, it wouldn't. And another one to look at, you know, after you looked at this, we got the Sing dollar as well.
Well, I haven't got Sing dollar. I'm on a fusion markets thing, so I'm on a proprietary account, so I haven't got it.
No Sing yen.
No Sing at all. So you'll have to take that back.
Well, votes. We had the votes on the weekend for the president. And they've voted a new president in. Whether that changes the price, and this is always a little bit tricky. You know, Labor Day looks to me like it's really halting this market. You know, there's not a lot of activity really going on. But yeah, they voted on a new president. There's a Sing yen setup, if you like, on a wave rider, on a daily wave rider, and we'll see whether that actually kind of plays out because of the voting system. I know the president is a hugely important figure, not as an important figure in Singapore as the prime minister is, as an example, but still, you know, all this stuff kind of has a potential effect on how the market might move, you know, for a day or so. And this is really back to this pound. do we get a day or so where we see some upside after that new data has kind of come out and sort of suggesting that the growth is nowhere near as weak as it has been, and we've almost completely bounced back after COVID?
Well, that's really interesting, because, as I said last week, I thought the pound was probably one of the best setups for a sell. And the reason is evident on the chart, right? I'm on the weekly chart. And we saw the break, the strong trend that pound went into, hit a resistance level. It's not completely evident on that chart, but I won't go wider at this point. But then it came back underneath trend line and then retested it with this bar here. So that was the selling bar there. And I mean, I know that's counterintuitive to most of you, but that's pretty much how I trade. If I've got a bull bar, I like to sell. If I've got a bear bar, I like to buy. So that's exactly what's happening here. So I thought last week was not a fait accompli, of course, but it looked pretty good for a sell. During the week, last week, it looked like that would not even be a follow. Sorry, that was the week before. There wouldn't even be a follow through, and we've come back and tested that level again. Mate, can you take over? This looks like an important call, please.
Yeah, no problem at all, mate. We actually have. Let's go back to this CAD Swiss that I've just been looking at. Look how frustrating this can be. So we've got the CAD Swiss now. You know, you guys might actually get the same price as me with a much nicer looking bar to enter on, but this is really frustrating. This is still sat in the market here. My entry price was 0.65010. The low of the bar is 64994. There's a spread of 21 pipettes, so that puts the actual entry price at 0.65005. So I've missed it by half a pip being entered into this one, and I suppose maybe I should appreciate that was the case, because that I wonder if I might just move that up a little bit and see. Let's put that there. Put that down there. There we go. There, I've just moved that entry up a little bit because it's just decided that it's going to bounce slightly earlier than my target price. So I'm just going to do the same actually on another chart.
Sorry, mate. One of the geese got out.
Oh, really?
The neighbour. I knew it was urgent.
I tell you what, there's a lady across the road from me. She's been quoted £6,000 to remove bamboo from her property because it's starting to get under the
got the wrong type, eh?
Under the foundations. I guess that must be what it is. Yeah, we were talking about.
Yeah, it's dreadful stuff, mate. It's absolutely dreadful. I won't have anything to do with it.
No, no, nothing to do with the dreadful stuff.
No, shit, no. I mean, shivers, no.
Yeah.
I know through experience, to take that stuff out is unbelievable. It took us about 3 months to get one little stand out. And the little stand, I'm talking about maybe 3 meters.
Wow.
And I think had we put them end to end, we probably could have made it to your place. There was that much under the ground. It took us 3 months working every weekend to get it out.
Oh, do you know, it's mad. I've got a neighbour helper. She said I can't afford to pay that, so she's got a neighbour helping her. And you telling me that suggests to me the neighbour's going to have a hard battle.
They're going to be there for a while, mate. I can tell you that.
Oh God, I wonder whether I should offer to help as well. They might need a few extra hands.
No. So you're busy.
All right, I'll offer my help, but tell them I'm busy.
That's it. I'd love to help, but
yeah, I'm busy. I'm interested in what the guys in the room are looking at as well. If are you guys looking at anything specific, Jeff and Teen, you guys looking at any trades that maybe we could all have a quick look at and see where there might be a turn? I mean, the biggest sort of part of any sort of trade really is, have you got the direction right, and how do you determine direction? It's the key for me, mate.
Yeah, absolutely. Going back on what you just said, you've given me a little bit of cause for concern on. I've got a trade on pound. Sorry, I've got an order on pound CAD short, which is doubling up on the CAD. I know, but
Yeah.
That's what I saw on the chart. If you go to, and I think it's the weekly. I've got it on. Yeah, it is. It's the weekly.
Yeah.
So I'm trading. You know how I like game changer bars to actually change the game rather than. I saw a couple of game changer bars that happen within a trend, right? And there's no retracement, so I can't trade them in a trend without a retracement.
Yeah.
So what I got the week before last was a game changer bar on pound CAD. Placed the order, didn't trigger. Now I've got an inside bar.
Yeah.
Backing up. Well, when I say backing up, well, it does really because it's come off its high. It backs up that game changer bar from the previous week. So I've got a second order with the CAD underneath last week's bar. But what you just said kind of suggests to me that the trend may continue, which of course is bullish.
Yeah, absolutely, mate. I don't know whether I would, and you know, there's always this kind of like double narrative going on when you kind of see the technicals versus the fundamentals. When I look at this, I would be the same as you. I'd be thinking, you know, this is high. This is and really we're due a retracement. We're probably due a retracement down to at least this area.
It's
here.
hit resistance. It's giving me a lower high. So
yeah,
that's where I start to get interest.
Yeah, I would suggest the same. The timing of the announcement from the Office of National Statistics, so the ONS, suggests that maybe it's not going to come down today, and it might not even come down this week. I don't know, but the timing doesn't seem to be there for a trade short today. But the technicals suggest that there could be a retracement at some point, you know, from these areas. I still think, even with what we've heard over the weekend, it's going to struggle to continue a surge to the upside. It's also about kind of, you know, inflation as well. If we get the growth, that's one thing. But if inflation does start to ease back a little bit, and there are some signs and signals that that's happening. If inflation starts to ease back a little bit from the UK, and there are other things kind of going on, so that growth story is one thing, but there are other sort of sides of the market where the housing market particularly is under incredible stress, and there are a lot of people that over the next sort of you know, already over the next few weeks now, and over the next few months are coming to the end of their term of their fixed mortgage, and they're going to be sort of like bumping up the higher rates. There's stories of, you know, I don't know if it's 5% or 10%, but there is a you know, a percentage of people. There is a statistic of people that are now in negative equity because of the reduction in house prices versus the amount of mortgage that they're paying. So there are other things. Yeah, there's lots going on, and actually to sort of like come out and say, really that growth number was, it puts us third in the list rather than bottom, but because everybody else hasn't really done an amazing job either, all we've really done is go from no growth to low growth. It's not like it's been like, you know, and growth has been really good. Actually, growth has been amazing. It was just low growth rather than there being an actual sort of, you know. So I'm not sure how much that's really going to carry us through after today. I think maybe today there'll be a little bit of reaction, but after today, I wonder whether you know, we start to kind of focus on something else. And if inflation figures start to, you know, continue to weaken, you know, we've gone from near 12% down to near 6%, so they've already halved. If they continue to weaken and we start pushing further towards the 4.3s, then the pound is, I think it's likely to come back, because I don't think the Bank of England are that keen on continuing to raise interest rates. Right now, they still have to, but when are they at near the end? There's already kind of anticipation that the Fed and forecast that the Fed are near the end, if not at the end. But that's when the pound really turns for me, when they are actually at the end, when they sort of say next thing's the pause, or suggestion that the next thing's the pause, then I think the pound's coming down, and it might be in this area. I think there's a decent chance it's from this area.
Well, yeah, this is the weekly trade, so it stays alive till Saturday morning, my time. Yeah, look, until the high is taken out, I think I'm probably in the right space. We'll see.
I think so. And as you say, you're doubling up on the CAD, but and the CAD could do with a little bit of
two little bits, not
two
too
little
big
bits
bits
on the CAD. Yeah, but I mean, I suppose we're kind of we're putting a lot of faith in the CAD, and actually for no reason. That's the biggest problem.
It's seemingly not. Well, there is a reason. If you have a look at the oil chart, go to the oil chart. Oil's broken out.
Yes, it has. You're right.
So that's not going to hurt the CAD. I'm not suggesting it's going to make it, but it's not going to hurt it, certainly.
No.
We've got BOC out on Thursday-ish or Friday. I'm not sure which. And that will probably determine the immediate direction of the CAD. So we may not see a lot during the week, but towards the end of the week we may have our immediate fate sealed for us. I don't know, but they may buy into it. They may not. We'll see. Or it won't hurt. That's what I'm saying.
No, it won't. I think, looking at last week's numbers, GDP was at zero growth, it's at 0%. So no growth, no contraction. Manufacturing PMI is at 48. So, really sort of suggesting that there probably is further contraction in GDP.
Is anyone above 50 at the moment?
In some areas, not in manufacturing, actually. In some areas, some of the service sectors still doing, still there. So it's not awful, but you're absolutely right. Everybody's showing contraction.
So I don't really consider that to be a negative, is what I'm saying.
No, very true. And you're right about WTI. I suppose it's going to come down to maybe now a bit of a race to the bottom, possibly. Rather than now we're sort of, before we were looking at who's raising interest rates and where these are going to go. Now it might be a race to the bottom. Who's reversing first, who's pausing, who's reversing first, and everything else. Bank of Canada's next interest rate is on the 6th. So actually, that's on Wednesday.
Yeah, I don't see any central bank raising interest rates anytime soon. I've got to say.
The Bank of England may. The Bank of England may. Yeah, they might be, because inflation's still 6 to 7% is incredibly uncomfortable. And now they've got those ONS figures out, they can be a bit more comfortable about saying, okay, fine, maybe we haven't got, when we're not choking just as much as we thought we were, or maybe the economy could do with that little bit more choking, because the growth wasn't as bad as before. So I think that if there's anybody that's likely to do it next time, it's the Bank of England.
Okay, how far away is that? Good question.
Bank of England's next meeting's on the 21st of September.
Okay, then I've got 2 weeks to get out of this short trade, if that's going to be the case.
I don't think so, mate. What the way I would see it is, you've got 2 weeks to see what the data is leading up to that particular announcement. I don't necessarily think you've got 2 weeks to get out yet, because they're the most likely. But of course, things can change in the next 2 weeks. We've got, in fact, let me just look at this week. So this week we've got from the UK. What's going to be the most significant PMIs? They're going to probably come out relatively weak anyway. And what I'm really looking for is inflation data from the UK and house price index. So that might play a little bit of a part. House price index is on Thursday, but that's not a major one. On Friday from the UK, we don't have anything. So there's not actually a lot this week. So nothing to suggest it's going to move either way in some respects. Now going into the week after, then we have some unemployment data. So on the 12th of September, then we start to really see what's going on. The average earnings are out. Average earnings have been above inflation, which actually is a good sign. The unemployment rate is also announced. We've got GDP on the 13th of September. We got trade balances as well on the 13th of September. There's
okay.
you know, you got enough, mate. And there'll
So
be CPI
the BOE
data.
will be looking at that, looking at those things. Yes.
Yeah. They'll be looking at the lot. You know, that they won't have made their decision just yet. If they don't need to, they won't have made a decision. So there's a little bit coming out, mate, before.
And they don't need to. Exactly.
Yeah,
Yeah.
they don't need
Okay.
to. What they, you know, what they really want, and actually the big one, yeah, this makes the picture a little bit tricky. Core and general CPI data is out the day before they announce their interest rate.
Of course.
You know, makes it a bit tricky.
Look, we'll just follow the nose and see what happens. It's simple as that.
Yeah, CPI at 6.8%.
CP is that now?
Yeah, currently the last print was at 6.8%, which suggests another raise, another hike.
Yeah, well, okay. Interesting. All right, there's a couple of things I haven't shown you. Have you got anything else before I do that and we get the heck out of here?
Yeah, all good, mate.
All right. The only two things I really haven't shown you is where, well, you know where I'm getting in, but I'll show everybody else where I'm getting in to CAD Swiss if we're fortunate enough for it to actually rally. And that is above Friday's bar, which is a shocker. It's an absolute shocker to be actually wanting to trade. But then again, it's not. And my reasoning is that bar that Ash pointed out from Thursday, which was a clanger. I mean, that's pretty strong. Then we got a retest of that trade line that was broken. The really good part about all of that is that the bull bar not only took out the weekly pivot, naturally the daily pivot, but it's also taken out this 4-day-old monthly pivot. And therefore, the whipsaw action from Friday took out the high of that bar, but then, of course, settled bang in the middle of it. Good part is the high of that is way above the monthly pivot, which is where I can, in my opinion, reasonably safely put my entry long. Now, I'm going to miss out on all of that, no question. But the way I trade is like an old man. I haven't got the kahunas to trade like Ash does and get in at the I'll call it the right price. To me, it's the safe price. So that's why I'm opting for that level. And for me, that's the way to go. For everyone, it's not, of course. The other thing that's interesting, and I know this is a little bit convoluted, so I'll probably have to go through there. It's convoluted because we've had false break above, false break above. But this one is clear. If I can ignore those two, we've smashed through this support trade line and then come back and retest it, failed to close below it, exactly as we didn't close below the resistance trade line. And the only reason we're below here is because of a gap this morning. Why? Got no idea why. But price on Friday refused to close below both of those levels, which to my mind is interesting. There is also that horizontal level through here, which is strong. There's been support here, strong support, resistance, 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 resistance. So like Ash and I both said before, this is a setup and a clear setup. And if I don't trade that, then I have got no business trading at the end of the day, because we are at an extreme oversold area. And if you don't think that's the case, well, just widen out on the monthly chart. This is all-time lows, extreme. And we've got reasons to think that this level is the one that we're going to see some sort of bounce off. Whether it reverses and goes the full distance, of course, is an entirely different kettle of fish. But like we've been saying, we've got no business not to trade this long, in my opinion, anyway. You saw the pound CAD, just trading that bar really, but I don't think stop loss belongs here. It's got to get above the swing. So that's why I've got my stop loss above there. If you want to follow that, that's our first take profit level, which is pretty much on that resistance area and support area. If this does reverse, similar to what I've just said on CAD versus the Swissy, this has got a fair distance to travel, probably down to here. Yeah, we're talking 1,100 pips, I think it is, something like that. So if I can find my way in here with a not quite 300 pip risk and get, it's only 1,000. I can get 3 to 1 out of that if it works. If it doesn't, it doesn't. But to me, this is showing a lot of signs that it doesn't want to go above this area here, because it's fail. And last time it actually made up its mind, holy dooly, look what happened. V-shaped recovery, that sequence or that cycle to my mind is over. And this one here is suggesting to me that this level is no longer acceptable. So that's why I'm happy to trade that short. I think that they're the only two that I was really keen on, both CAD related, as I said. And it's too late. Well, it's not necessarily too late, but I thought euro dollar today was a buying opportunity short term, and that's played out to a degree. I'm hopeful that there's a second opportunity down here as we look for a false break. There may well be. Targets, look, I don't think you want to go too far above the weekly pivot, to be honest. Certainly not today. If it does go beyond there, I might have to change my mind. But I don't see the dollar buyers yielding much more than this area here, which is about 103.55, maybe a little bit further down into these pivots, maybe retest the backside of that channel. That would make sense to me. But then I'm a buyer. I'm a buyer from here right back up to 105.5. So that makes sense to me. Euro going the opposite direction after today, maybe after tomorrow. But short term today, I think the euro dollar is a buy. Just like the dollar index pulls back to here, euro dollar probably pulls back to here. We'll see. That's where I'm at, and I really don't have too much more. All those game changer bars today, as I said, are not really changing the game. They're actually going with the direction of the market, and a game changer bar doesn't do that. It needs to wait for a retracement, then change direction. So I don't think they're perfectly valid. Well, I don't think they're valid at all, most of them, except for that pound CAD one, which is why I'm trading. Righto.
Sounds good. Well, yeah, I haven't heard from anybody in the room. It's kind of quiet out there. So I don't know whether...
very quiet out there. What's going on?
Well, maybe US holiday.
All that advertising.
I don't. Money well spent.
Incredible. Pardon our mirth.
Yeah. Do you know what? We got to get this Zoom chat sorted as well. It's awful that people can only message you or I. I think I can message everyone.
I can too, but apparently not everyone can.
Yeah. Don't know what's going on with our Zoom thing, but anyway, have a great week, mate, and Paul and who else is in the room with us today? And Teen, yeah, have a great week, guys. I hope the show has been of some use to you, and if you do have some ideas and any trades, then always feel free to pop in and say hi. You can come on camera and mic, or you can put it in the chat box. Not a problem. We'll have a look through and discuss the charts. That's really what this show's about, just discussing ideas and seeing if we can ultimately trade the ideas better. Yeah, as I say, have a great week. Continue to focus, continue to be patient and stay safe. Thanks for being my trading buddy, mate. I will see you on Thursday for right now, and we'll discuss all that going forward.
You bet. Have a great week ahead, everyone. Thanks for being our trading buddies. Bye-bye for now. Uru.